Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. Uncle Frank has a little time off and I will spend some of it making videos for all of you. The one thing that drives my videos is I hope to share information you could really use and benefit from. I have a New Year's resolution for you. Ignore the loudest idiots of this movement on Twitter and find some smart people to listen to on LinkedIn. Take this Nimrod, for example, Crystal Ball. He posts, "Wow, this is a great deal. Another $25 million in principal debt previously due 2026 gone, ensuring AMC has no risk to its survival by paying off this 2026 debt. Only 3.3 million shares, nothing. Great job, CEO Adam. 7.47 per share and higher than the current price. Huge win." Chris, we sold the stock at 75 cents on a pre-split basis. Okay, Chris, I'll tell you what. I will manage your real estate portfolio for you free of charge. What I'm going to do is I'm going to sell an investment property you own for $10,000, even though it's worth $100,000. Yes, at a 90% discount, but then I'm going to pay off one of your high interest credit cards, like your Citgo card. Happy? Chris, at the close of the third quarter, AMC had over $700 million in checking. We don't have to sell our stock at depressed prices like we did with the ape. Remember the pounce? Today we pounce. We could build the stock price by not doing or tweeting about these private placements with Antara, one of our short sellers, and swap the stock for debt at far higher prices. But maybe we still owe Antara for rigging that shareholder vote. Just a theory. Chris, don't you wish Adam Aaron treated us shareholders as well as he does Himanshu Gulati? Do you know who that is, Chris? Look, I support the company. I support the stock. But I can't support stupid, and neither should you. Now, let's compare that truly moronic tweet with one from a real businessman on LinkedIn like Jake Sharp. He's the CEO of the Sharp Group for over 20 years in LA. He does commercial real estate loans from 5 to 500 million. So he's a finance guy and an entrepreneur, and he left more brains in the toilet this morning than Crystal Ball has in an entire lifetime. Let's compare posts. Everything's fine. Move along, people. Nothing to see here. And do not say anything about this. Now, he posted a chart that comes from the Fed Reserve Board, and it shows bank credit is contracting sharply. Now, what's important about this for us apes is we're looking for black and white swan events, some kind of catalyst, okay, that'll turn the prime banks and brokers against their best customers, the hedge funds. Right? We're looking for something that attacks the leverage chain of the hedge funds where, the prime brokers are going to come in and say, hey, yeah, you know what? You need to lighten up on this AMC trade. Okay, cover that one, sell this, buy that. They're going to make some adjustments. Either they got to come up with cash, right? Or it's margin time, margin call time, right? Now take a look at this chart. On the right, you can see how bank credit is completely collapsing. The last time it did this was 2008. So what Jake is showing us is we might be in a season where we get another crisis. And this was an indicator that showed that. Don't you feel a lot smarter now? Okay, here's a great headline to start out the new week with from the Motley Fool. The bond market just sounded its most severe alarm in 50 years. It could signal a big move in the stock market in 2024. Recent signs of economic resilience have more and more investors giving credence to the soft landing narrative, a scenario in which the Fed Reserve successfully tames inflation without causing a recession. This growing conviction in this rather rare outcome helped propel the three major U.S. financial indexes higher in 2023. Year to date, the blue chip Dow climbed 13% and set an all-time high. The broad-based S&P 500 increased 23%, and the tech-heavy Nasdaq soared 42%. Yet analysts at JP Morgan Chase and Deutsche Bank, among other financial institutions, still see a recession as a distinct possibility in the next 12 to 18 months. They are concerned that the impact of higher interest rates has yet to fully make its way through the economy, and consumers have propped up the economy so far with outsized spending that is depleting savings and causing many to take on added debt. Some analysts argue that an economic downturn is possible or even probable as those situations evolve. A potential confirmation of the analysts' fears can be seen in the bond market, which is sounding its most severe recession alarm in decades. Okay, guys, how do I read this? You know what? If the big guys are short, then more rallies hurts them. That's what I'm rooting for. So how are the theaters doing this weekend? Well, we knew it was going to be a tough holiday. We didn't have an Avatar this year to drop. Also, the dates that the holidays are falling on really didn't lean, to big crowds at the theater. But, it depends who you ask and when. From Variety, Christmas box office, Aquaman 2 sinks with $40 million debut. Now, same author, box office, Aquaman and the Lost Kingdom opens to $80 million overseas. Wonka surpasses $250 million globally. So, guys, I don't think it's all bad news. Aquaman and the Lost Kingdom failed to make a splash at the Christmas box office, debuting to $28 million over the weekend and an estimated $40 million through the 4-day holiday weekend. Okay, stay tuned. Okay, this perspective gives us a little more clarity from Deadline. Christmas box office down 7% from 2022. Aquaman 2, $40 million, Wonka, $28 million, Ferrari and Boys in the Boat launch previews, Monday update. So that was from yesterday. Now, if you look hard enough, you can find some good news. From Screen Rant, Godzilla -1 passes major box office milestone in mega-sized U.S. release. Godzilla -1 has become a box office hit, quadrupling its intended one-week release. That's good for us. The movie is expected to close out the Christmas holiday weekend with a domestic total of $41.4 million. By passing the $40 million milestone, it joins the ranks of only 54 movies to do so in 2023. Not all bad news. The immediate concerns for Uncle Frank right now is, can the industry catch $9 billion for the year, which is what we were hoping for until the writers and actors strike screwed us. And of course, I'm hoping for a surprise to the upside on revenue and earnings for Q4. And yes, guys, I know that AMC's new chocolate-covered pretzels could cure cancer, and it wouldn't help us. But I'm not going to stop analyzing the data just because the SEC lets these one percenters run all over us. You can see as of this recording for 2023, $8,635 million. So let's see how we could do with the rest of the year. Okay, today I'm going to do my part by going to see Ferrari. I didn't get to go last week for the premiere, the early showing, and I may score this Aquaman popcorn tub and cup combo. Okay, XRP is getting a little saucy over the holiday weekend. At the time of this recording, I've got us at 0.6352. It had been over 0.64. Market cap up 2.07%. That brings it in, ranks it at 6th. And the volume over the past 24 hours up 84.53%, which I think brings the ranking in at 8. So there's some interest here in XRP. Let's see why. So let's start with this headline from Coinpedia. Ripple breaks its key resistance level. Is XRP price about to explode? That was from 5 hours ago. But more importantly, from the crypto basic. XRP targets 94% surge to $1.20. Here's the projected timeline. Okay, from that article. Prominent market analyst Agrag recently predicted that XRP would rally 94% to the $1.20 price target, citing the imminent breach of 3 pivotal resistance thresholds. Now, that's exactly what I said in one of my earlier videos. I believe if XRP does catch a rally, it'll take out all 3 most recent tops and then maybe set a new high, right? Agrag believes XRP would still break the $1.10 resistance, making its way to the much coveted $1.20 price zone. According to the analyst, XRP would breach these resistance levels to hit the $1.20 price within a maximum of 55 days. That puts the target period in February. Having said that, this is the article that caught my eye from B in Crypto. This is why Ripple Whales bought 360 million XRP in 7 days. From yesterday, Ripple Whales recently amassed 223 million worth of XRP amid a period of price stagnation for the cryptocurrency. This accumulation coincided with Ripple executives revealing the SEC's previous proposal to settle the lawsuit. However, the proposition was rejected by Ripple, which emphasized that XRP does not meet the definition of a security. Whales appear to leverage the stagnant price action of XRP to secure discounted purchases. The most recent acquisition of over 360 million tokens coincides with the amplified censure aimed at the US SEC by Ripple executives. Over the past week, crypto whales were spotted buying XRP aggressively, signaling that a spike in price volatility is underway. This is not investment advice, and I'm not an investment advisor, but I agree. This is why I think XRP may be catching a bid here. From Cointelegraph 2 days ago, Ripple's legal chief unveils SEC's XRP settlement offer before the 2020 lawsuit. And from CoinGape, XRP lawsuit. Ripple legal chief reveals U.S. SEC settlement offer. Okay. The most important immediate catalyst, in my opinion, is settling this case with the SEC and putting the regulator, completely behind us. Then and only then will that open the doors completely to mass adoption by the global banks and even the Ripple IPO. These things will simply never happen until Gensler removes his worthless ass from our backyard barbecue. So that's where Uncle Frank stands. If we come to a settlement, I think XRP finally moves higher. If we don't, to the downside or more sideways action. I believe this is an important article for you to read from Financially Plus, titled Remembering Charlie Munger, 13 Common Financial Mistakes to Avoid at All Cost. Guys, I never really liked Charlie Munger. I thought he was too dismissive of crypto technology and its potential. I haven't liked Warren Buffett since Obama, hung that medal around his neck. But now that Charlie's gone, it wouldn't hurt to heed some of his warnings at the end of the year. And remember, he was a multi-billionaire from trading alone. Charlie's first warning is about deprival superreaction theory. Mr. Munger observed that the pain of a $10 loss is often felt more intensely than the pleasure from a $10 gain, a psychological bias that significantly impacts labor relations. Despite the greater harm in companies shutting down, workers tend to find the reduction of wages more unacceptable due to the perceived sense of deprivation, illustrating the asymmetry in the emotional impact of gains and losses in economic decision-making. The moral of the story to me, get your emotions out of your trading. Okay, this one goes out to Little Bigums and former YouTube apes Fanny Pack Matt, Meet Kevin, and Trey Trades, liking and loving tendency. Munger notes that the innate desire to be liked and loved can lead individuals to act unwisely. This may involve overlooking faults, complying with wishes, favoring associated elements, and even distorting facts to nurture affection. He highlights the feedback loop where admiration can escalate to the point of causing deliberate self-destruction in an effort to support what is loved. Wow, this one goes out to Crystal Ball and Sochka over there making videos on Twitter. Know what you don't know. Charlie said, knowing what you don't know is more useful than being brilliant. Recognizing the limits of your knowledge is more valuable than sheer brilliance. Wisdom begins with acknowledging what you don't know. Stay within your circle of competence, leveraging your understanding to navigate challenges, as avoiding pitfalls is often simpler than pursuing exceptional feats. Wisdom. And here's one for all of us apes. Over-optimism tendency. Quoting the Greek philosopher Demosthenes, Munger emphasized the connection between personal desires and beliefs, stating, "What a man wishes, that also will he believe." To counteract the pitfalls of overly optimistic thinking, Munger proposed the use of simple probability math, drawing on the teachings of Fermat and Pascal as an effective antidote. And here's some good advice for GameStop supporter Marantz. Avoid crazy. Charlie Munger, who passed away at 99, attributed his success and longevity to a simple piece of advice. Avoid crazy at all costs. Munger, the longtime business partner of Warren Buffett, valued caution, steering clear of major risks in both personal and professional aspects of his life. He defined crazy as engaging in risky behaviors like excessive borrowing or falling into personal vices that could lead to significant trouble, emphasizing the importance of avoiding standard ways of failing. Munger's prudent approach to life, marked by a preference for long-term investments over short-term gambles, contributed to his financial success and overall well-being. And more good advice for all of us. Lifelong learning is paramount to long-term success. Munger, known for his sharp intellect and pragmatic approach to business, emphasizes the value of acquiring new knowledge and skills throughout one's life. According to Munger, the world is constantly evolving, and those who commit to continuous learning are better equipped to navigate the complexities of the ever-changing business landscape. He believes that cultivating a curious mind and staying intellectually curious not only enhances individual capabilities, but also contributes significantly to sustained success in various endeavors. Munger's endorsement of lifelong learning aligns with the idea that an adaptive and informed mindset is a key driver for prosperity in the long run. And here's one for the predatory short hedge fund operators like Kenny Griffin, Jim Chanos, and Double Chin Rich Greenfield, who all decided they must profit from the misery of the pandemic by naked shorting a 100-year-old American company so they could buy a $100 million painting during the pandemic like Kenny did. Charlie once said, "If I can be optimistic when I'm nearly dead, surely the rest of you could handle a little inflation." In this statement, Munger is likely using humor to convey a broader message about resilience and adaptability. By mentioning being optimistic when I'm nearly dead, Munger is emphasizing the importance of maintaining a positive outlook despite challenging circumstances or uncertainties. The reference to handling a little inflation suggests that, in the grand scheme of challenges, minor economic fluctuations or disruptions like inflation should not undermine one's overall optimism or ability to navigate through life's ups and downs. I will never ignore my mental stop-loss rule. Charlie had a different take. Learn to stomach large market dips because he's a long-term investor. From him, if you're not willing to react with equanimity to a market price decline of 50%, 2 or 3 times a century, you're not fit to be a common shareholder. Munger is stressing the inevitability of market downturns and the necessity for investors to withstand the associated volatility. And here's some old school advice that might be lost on the current generation: spend less than you earn. Charlie Munger's emphasis on financial prudence is succinctly captured in his straightforward advice, spend less than you earn. This timeless wisdom underscores the fundamental principle of living within one's means and cultivating a habit of responsible financial management. Munger recognizes that the key to building wealth and financial security lies in maintaining a gap between income and expenditures. By spending less than one earns, individuals can not only avoid the pitfalls of debt, but also create opportunities for savings and investments, laying the groundwork for long-term financial well-being. And this is why I have no intention of posting on Twitter anymore. It's filled with people that believe facts are FUD if they don't like the facts. Charlie Munger's advice to avoid toxic people and toxic activities underscores the importance of cultivating a positive and healthy environment in both personal and professional realms. Munger recognizes the profound impact that individuals and activities can have on one's well-being and success. By steering clear of toxic influencers, whether they be negative individuals or harmful behaviors, Munger advocates for the preservation of mental and emotional health. And here's one the AMC apes had to learn the hard way. Deferred gratification because you prefer life that way. In encouraging the principle of deferred gratification, Charlie Munger advocates for a deliberate approach to decision-making that involves delaying immediate rewards for long-term gains. Munger's advice suggests embracing a patient and strategic mindset, wherein individuals forgo instant pleasures or desires in favor of building a more substantial and fulfilling life over time. By choosing deferred gratification, one aligns with a philosophy that prioritizes delayed rewards for the sake of greater future achievements and contentment. And here's my last slide on Charlie, and I hope you're still with me. Help another human being know more. Munger's assertion that the best thing a human being can do is to help another human being know more reflects the profound impact of knowledge sharing on personal and collective well-being. By actively contributing to the education and enlightenment of others, individuals create a ripple effect of empowerment and growth. This philosophy aligns with the idea that lifting others through knowledge not only enhances their lives, but also contributes to the overall betterment of society. You know, I once made fun of Charlie in this big chat discussion he was on. I said he probably flew a pterodactyl to school, but now that he's gone, I miss him. He was one of the last great old-school traders with a big mouth and a great sense of humor. He was around before algorithms and even computers, and it turns out he was my kind of guy. Godspeed, Mr. Munger. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.